The Federal Treasurer, Jim Chalmers, handed down the federal budget on Tuesday this week. And joining us to unpack what it actually means is our usual finance guru, Daniela Greening from Olive Tree Finance. Welcome, Daniela.
Hi, Michael.
Now, what does the federal budget look like to you, and how do you think it will affect us mere mortals?
Well, I think, as he's put it previously, Jim Chalmers, it's a pretty stock standard, run-of-the-mill budget with no big deciphering sort of changes. I mean, obviously, we're all living in a unprecedented economic times. I mean, we've got inflation that is, about due to peak at 7% this month. And then we've got the lowest unemployment rate we've had in decades. But yet income or pay is stagnant in the market, growth in pay particularly. So it's an interesting time to be alive, but also from a budgetary process, there's huge deficit. I mean, the underlying cash deficit rate is $36.9 billion. They're expecting the cash rate to peak at the first half of next year at 3.35 with the RBA. They've got another meeting this Tuesday, which is Cup Day, and I envisage, based on the 7% inflation rate, we will get another probably 0.5% rise in the cash rate. So investors, borrowers, owner-occupiers, or just the average pundit like you and I are going to have to, unfortunately, bear the brunt of higher interest rates in the coming months again. So it'll be interesting to see how those things affect us. And obviously, inflation, just average purchasing power, has declined rapidly.
And we've seen some pretty frightening predictions for energy costs as well, with a 56% electricity by the end of the next financial year, I think.
Absolutely. And I think, like you and I, those are the things, unfortunately, we can't live without. And so it'll be interesting to see what the impact of those are on just average retail spending, because that seems to have, inflation and cash rate rises haven't really dampened retail spending in the market. So it'll be just interesting to see what happens.
But there's an upside for self-funded retirees with money in the bank. Hopefully their interest rates will go up on their savings. So, how do we offset that?
Well, self-funded retirees particularly have had it really hard in the last sort of decade, with interest rates being as low as they have been. So they will see some improvement in their bottom line, budgets personally. From our perspective as just your average pundit, it's going to get harder and harder for us in the next 6 to 12 months, unfortunately.
Now, do we have confidence now, after the Reserve Bank came out and said no interest rate rises now till 2024, and now given their predictions, do we sit comfortably with their predictions?
Well, I think they made those sort of predictions on the back of what was at the time pre-pandemic and obviously pre-conflict environments in the world. And those two big factors have changed economically the worldwide total fiscal view of the world. We couldn't predict, obviously, a worldwide pandemic, but certainly couldn't predict Russia was going to invade Ukraine. And obviously the impact of those sort of things on the bigger picture has been huge. But look, they're going to have to wear what they said a few years ago, and the impact of what they said meant people went out and borrowed lots of money with, in their head, I suppose, lesser risk. But it is what it is, and we're just going to have to live with it.
Increase for funding for tax compliance. So Taxman could be coming after a few of us if we don't do the right thing.
Yeah, he's made, the ATO generally have come out and really been gung-ho about they're going to knuckle down on certain job environments and certain people claiming things that, probably historically they wouldn't have even thought twice about. They're going to be really, really going things through, I can't speak, going through things with a fine-tooth comb when you lodge your tax. So yes, there will be a greater implication on those sort of things.
Right. And along those lines, Daniela, the depreciation has changed now on certain items. What does that actually mean?
So when you buy an item and you have a value allowed with that item, you can depreciate it over a certain number of years until it depreciates to what's termed zero value. Those sort of things are going to slightly change. How specific to specific areas they change, I can't sort of pinpoint them for you now, but your accountant will be able to help you with those slight changes. But there is some changes in the legislation around depreciation on items, vehicles, and commercial assets.
And there was a move to change on the superannuation contributions for people wanting to downsize, increasing the limit.
Yeah, absolutely. There's been an expanded eligibility for those downsizer contributions.
Great. And childcare, cheaper childcare now seems like a good thing, but we already have so many centres operating with staff level waivers because they can't find the staff. Does this have the risk of either lowering the standards even more or them just simply not being able to take advantage of it because they won't be able to find a centre?
I think it's the latter, Michael. Unfortunately, the childcare environment in Australia is just so hard at the moment. They can't find. Obviously, there's an employment shortage, so getting qualified staff is an issue. But placements are another avenue of problem for them as well, because there's so many people wanting childcare and just not the places to meet the requirements out there. So it'll be interesting to see with the cheaper childcare what happens. The cheaper childcare might also reflect in different areas. So higher socioeconomic areas where women generally haven't gone back to work because they haven't needed to go back to work. You might see in those areas where there are spots become less and less available because women have decided, yes, it's now favourable for them to go back to work. So across the board, it'll be interesting to see whether the spots become available or there is a growth in that area. But I think the underlying issues, as we've seen across the market, is going to be just getting enough people to work.
Yeah, again, supply side seems to trump every other hurdle that's thrown at us, regardless of industry.
Absolutely. I think it's just, unfortunately, we're living in unprecedented times. You and I are roughly of the same generation, and unemployment at 3% is just something we, I suppose, have never, ever seen.
Yeah, it would basically be called full employment.
Absolutely.
Now, the government's grand plan to build 1 million homes in the next 3 years. We normally build, I think it's just over 200,000 houses per year.
Yeah.
Is this pie in the sky? Is this, we see the problems we have now with, again, trades, material, supplies to build just the normal amount, the 200,000. Is this achievable or, pie in the sky?
I think it's going to be close to achievable. Obviously, as we've seen, the borders have opened up in terms of accessibility for people coming from overseas to come into Australian work, and the speeding up visa processes around people coming into work and getting visas to work. So that's going to help initially. Obviously, access to building products is starting to get slightly easier as we're seeing the markets overseas starting to open up and shipping becoming cheaper as well. So there's been a huge issue with shipping and getting goods and service, or goods particularly from outside Australia into Australia. Just containers have been hugely expensive. So those sort of things are all starting to flatten out again and become where they were pre-pandemic levels. So I feel that as those things started to sort of leverage back to where we were 2 years ago, that building pie in the sky, as we were talking about, potentially will become more realistic, and they could probably get there in the timeframe that they're talking.
Now, the regional first home buyers guarantee, which really impacts my electric, how do we feel about that?
Oh, look, I think it's a really good thing. Yet again, unfortunately, for the average person who wants to live in regional Victoria, the price point for houses is going to go up and going to continue to go up. But I think from a perspective of diversification and spreading the load on the state, and obviously on other issues, which we've always talked about, is infrastructure, roads, hospitals, those sort of things in regional areas are going to become more important. And I think housing in regional areas is great. And also just from a standpoint of building community in those areas, and people going back to those areas to work in those areas is really good too.
Yeah, my electorate, we have 65% of the electorate leave each day to go to work because we don't have the employment hubs and the services here. We don't have our banks and Centrelink and all of those vital services, and we have inadequate public transport, which just entrenches and exacerbates disadvantage in our community. But let's finish with some top tips, Danielle, apart from knuckle down. What would be your top 3 tips for households? Are there opportunities or just challenges here with the changes?
No, there's plenty of opportunities. I think the average person or the average household it's a really good time to revisit your budget. Just look at those things that you don't necessarily need to have. So how many streaming services have you got? Just have a look at those sort of cost implications, everyday things like that. Make sure we're turning just basic things, turning lights off and power points off, reducing our water bills by taking Again, smaller showers, really, really simplifying, and making sure that if we're budgeting for foods and groceries, which are such a huge expense in the average person's household, making sure we're writing lists, sticking to those lists, meal planning, it's pretty basic stuff. And I think from my perspective, getting people to go backwards and review those sort of really simplistic bottom line things is going to help with overall budgeting in households.
And one final thing, I've been speaking with a finance broker, and he's told me now that the banks are actually taking in consideration your afterpay history as something. So should we be resisting the urge to go to those short-term lenders?
I just say to people, Afterpay and all those sort of short-term lenders, see them as a credit card. They're an implication on your credit file, and all the lenders see them and use them as the same thing. They look towards your total credit reporting history, and they have an implication. So if you don't need to use them, don't use them. They're just another means for a bank seeing the way you're traveling and what you're expensing your money on.
Great tip. And I hear that you've won an award, Danielle.
I didn't win, but I was a runner-up or highly commended in our local council. So I live out in the Whitehorse area. So I'm in the sole trader category. I was nominated with about 16 other businesses, and I received the runner-up or the highly commended award, which was pretty flattering for me. Yeah.
Well done. Well, we only have the best here on the Informer, Daniela. You know that.
Thanks, Michael.
All right, Daniela Greening from Olive Tree Finance. Thanks so much for your tips.
Thanks, Michael.